first thing first then, regarding yesterday's trades, okay? Now, I took a breakout trade on Euro JPY, okay? And the reason why I took that was there's a couple of factors. First of all, my trading view is really slow today. I don't know why.
Mine's been the same.
Is it? Yes, they must be doing some kind of updates or something.
Yeah.
Let's stick with this. Right. So the first thing I seen when I woke up this morning was we've had this 4 hour fair value gap that's been rejected, okay? And it's not been rejected, it's been heavily rejected then. Okay, so it's a big wick coming out of the 4 hour can't speak 4 hour 4 value gap, and what I was also looking at was the change in the structure of price. So you've got like a head and shoulders. So you see these two lines here. So these are two shoulders, but what you've also got then is you've got this new high. So you've got a high and a high low. So I'm thinking to myself, right, looking at GJ, and I think the entry time for me was about 8:45, and 8:45. This was the candle here for GBP JPY. And so right, that's tanked. Okay, so using that as a confluence, plus we'd also had I think there's a fair value gap here somewhere. There's one just down here. So GBP JPY had basically done the same thing. All right. So using that as a confluence, basically, I thought, okay, well, the chances are, if GBP JPY is going, it's probably going up here, clear all this imbalance to the order block, and then it may come back down, which it did. What it also did was it presented a 5-minute entry, whereas you had this 5-minute fair value gap here, right on top of the manipulation points. You could have put an order sort of anywhere around here with a nice 20 pip stop, as long as it's below this low, and that would have triggered and pretty much went straight to 3R. So with that in mind, with what was happening on GJ, I think it was maybe about 20 seconds before the breakout, I just took the trade, because I'm thinking, right, GJ's gone. Worst case scenario, it will sit around here in drawdown. I want to get best entry as close to the manipulation point as I possibly can. We're breaking this high here. We've got a change in structure, market structure. So we've gone from a low to a high to a higher low. We've also got this area here marked, which is the 143 level. And I thought, at least if I can get to there, or maybe 8-9 pips, I can move to break even, worst case scenario, or we may just come down, and if we were to break and close below, I've got plenty of time. I can close the trade early or close half the position and look at maybe taking something again. Luckily for me yesterday, it worked out. We had a little bit of a sticking point here, and then on the 5-minute, we had this little sort of miniature order block, which I think was pushing price back down. This here, I thought, right, again, if we close under the 143 level, potentially I can close the trade and again look to take something else later on in the day, or just call it a day and that's it. We had this kind of scenario, so we pushed back up and we're creating this kind of 1, 2, 3, 4 touch scenario, and I thought that the weaker this gets and the higher that the new lows get, chances are it will break through. If we break through here and close, we're going at least up to this area, and I may hit my 3R, which was a little bit low, I think. Was it? I don't know. It was about that anyway. That's where my take profit was.
Do you always set 3R as a standard?
3R is what I like.
On the structure.
yeah, last year I think we pulled off some 4, 5, 6, 7 hour trades, but last year the stops were tighter. The market's a little bit more. It's expanded now, so 20 pips is comfortable for me. 30 at a push, depending on the pair. The euro JPY and the pound sterling JPY, they tend to move more in pip value on average, especially GJ at the minute. I think it's moving almost. No, it's come back down. That was moving about 200 pips a couple of weeks ago. So yeah, I like to take a profit before an ADR. I think an EJ I pushed it a little bit. Yeah. But I was targeting this area here because of the draw on liquidity. If you ever watch any of that ICT guys' videos, he says the draw on liquidity is part of an algorithm or something ridiculous like that. So I thought, we're coming up here to take this high. Something else that I've noticed happens on a Friday, especially towards the end of the week. I mentioned it to Robin the other day. She said it was interesting. Is that the level that the price closes at on a Friday is generally close to a round number. So I thought, if we're not closing down here, potentially we're closing up here. But my 3 hour was me done, because I didn't want to. I can't stand trading through the crossover, because generally this kind of thing happens, and it's like a secondary manipulation. New York come for liquidity when the market opens, and my stress levels are shit when it comes to trading. I'll be sitting here for 3 hours, and I'm just about to hit take profit, and it pulls back, tags you out, and then continues. So I like to get out as close to 1 o'clock as I possibly can. I think this was about 10 past I closed it. If you look at GJ, again, we're 163. The Aussie CAD, okay, 91,500 maybe. That's no good. Euro, this is close to 0.55, I suppose. GU was on the button, 1940. USD CAD, 136, so 7 or 100 maybe. Yeah, so kind of thing happens. So it's not set in stone, but plays on your mind. I thought, well, if we're not closing down here, we're closing up here, and I thought this liquidity would be taken. So yeah, I don't think
if you move your stop to break even, for instance, is there any rule that you keep to move into it, or you just base it based on what's happening with the price?
Yesterday I moved after about 10 pips. I would normally suggest, if you're heading, so if we're heading for 60 pips, I'd go for about 20, 30 pips, maybe a third or halfway there, just to give it a little bit of room to breathe, because sometimes it will just pop back down, tag you out. But because there was a multitude of different kind of blocks in the way, you had this 15 minute 200 EMA first off, and then we had the 30 minute 200 EMA as well. So I kind of wanted to be at break even before we hit this area. I think a lot of this trade was based on the fact that I took a chance on it, and I got in early. If I'd got in here, I probably would have got taken out of break even. So yeah, I more than likely would have maybe not hit that trade, but say using GBP JPY as a confluence, and it was just tanking. It was about 45 minutes early compared to EJ. I use confluence quite a lot, especially with the majors and the GBP pairs, and DXY obviously, but DXY wasn't really didn't really have anything to do with GJ yesterday. The Japanese yen was getting weaker, so The other thing is that we were at pretty strong key levels. You've got this sort of area here which was getting rejected on the 4 hour and on the daily, I believe. Yeah, so if you were to draw a zone, it gets a bit confusing, but you got this sort of lower area here is rejected. We've traded above, all week basically, and half of the previous week. Excuse me, I'm still not 100%, my voice is still up. Similar sort of thing on GJ. We've got this area here. It's been respected. We've broken down below, but you see where the EMA is on the daily. And it's all about building strength. For the EMA on Euro is all the way down here. But, I think you've got to try and add up as many sort of, you could have even gone with that kind of thing. This low being rejected here, that manipulation point could have been the top of these candles. It's just weighing everything up, and I think the more you look at charts, the more you get wrong, and obviously the more times you journal and look at your trades, the better really, because you see this setup happening time and time again. The Asian high and the Asian low liquidity are extremely powerful. There's a lot more power to this little grey box than a lot of people will ever notice. And you see what we're reacting to here, and the top of this accumulation here, right? It's the same. It's reacting to this as much as it's reacting to the EMAs. We still had imbalance to fill up here. So there's another thing in my mind is, if we're coming down order block potentially, that would more than likely get run before it would come back down. So you just, it's game of chances, but you try and, weigh up everything, and try and take the trade in your favour. So if we're looking at confluences on this trade, we've got sort of a directional change in price action. We've got this huge rejection from the 4 hour. We've got imbalance that needs filling, so we've got a draw on liquidity here. We've got this major level in terms of daily, weekly, monthly levels, which obviously we'd broken above. We're breaking above this sort of area here. So for me, we're breaking out this way. I used to trade a strategy, it was a London breakout, and the way I would take that would be the first candle that would break out of the Asian session, I would take that trade. I would take it, and I'd put we used to get small little accumulations like this. So for example, I would take somewhere around about here, and I would have a stop loss like that, and I'd just see what I could get out of it basically. It didn't work consistently enough to stick to it, but the other thing is you've got sweep at the bottom, huge sweep at the top. It's also taking out previous day London Open prices here. Something that you may find interesting is the amount of respect that these opening prices get, because that's the session open at 10 o'clock, the red one, and then you've also got the day open. Now it's not the day open in terms of London or Frankfurt, Asia. It's 5 a.m. in the morning when New York is 12 midnight. So everything kind of resets, and that's the new day for New York. I think if you look at GBP USD, you see a lot more, like you see here, especially on the week, this week. Then we've broken down, we've come back up, we've respected both these levels. Same here, down, started respect here, but it's the opening day for New York. And if you look at the time of day that's been respected, it's 2:45. Chicago's open at 2:30. New York 1 o'clock. that I was quite happy when I put that red mark there and posted it to the free group, because
Yeah.
that was on point. That was anyway. But again here, generally you can see the wicks coming off it, like as if this trend line. You can see people they're trying to react to this. Retail traders probably. That's a fake out. They've just swept the high. They've come back up to this session open more or less. And then again, down it goes. So
I've never looked at opening prices before as a
it's something has only recently been brought to my attention. I don't trade using these,
yeah.
but it's
Just
when you
confidence.
look back and you see this kind of thing, it's quite unbelievable, really. Yeah. So, but again, the other one is the session volume. You see the session volume, the high peaks here. Let's turn that off a sec. So you've got the session volume, which again starts at 10 o'clock UK time. You can see generally this gets respected, and then this is the accumulation. So accumulation at the top, generally the price will move down. Bloody freezing in here. Again, it's not quite the same as the opening prices, but okay. So I think I've got to be honest, right? Since you came in the group, I like the way that you've kind of portrayed these manipulation points, and I think what you've headed straight into is not so much trading, this and then back down. You've gone into break a structure, change of direction, and you've used the backside trade system, which a lot of people don't get straight away. And I think with the market being the way it's been as well, you've got such an expanded market. If we were trading a manipulation point here, we wait all day for it to come, and then when it does come, it would just blow through anyway, because the momentum in the market, when it's expanded, it's very difficult for it to turn around. But in actual fact, when you're trading, especially when you're new to trading, you're trading manipulation points. They're like a mixture between supply and demand, order blocks, and support and resistance, basically. When you use it in a break and retest sort of structure, it seems to be working at the minute very well. So I appreciate you coming in actually and opening my eyes to it a little bit.
No, it's good. I mean, I guess all I've done is really taken in, I guess, what I've done before with the way that I've been using kind of breaker structure, and how I've been marking out, I guess, hourly and 4-hourly structure is basically really what I look at.
Yeah.
I guess probably more the hourly structure than the 4-hour. But yeah, I just generally work off that, and then using obviously the retracement of say an hourly structure break from top to bottom, kind of your 25 to 65 range as then where any manipulation points in there is where I'll be looking for, especially if there's fair value gaps or order blocks within that, then that's where I'm kind of looking for. And then just trying to make sure that the manipulation points that I'm marking up that you can. I mean, it's difficult because you do quite often see something on the 1 hour that then when you go down to the 15, it almost disappears.
Right.
Or you have to move it a lot. And I guess that's the challenge, is working out. Because sometimes recently I found that all of a sudden I've got about 6 different manipulation points on my chart for that leg of structure. And that's where I'm going, okay, so which one am I actually going to really look for?
This is it.
That's where I start looking at others to make sure something aligns with it, such as an order block or something like that.
First of all, there's no such thing as a perfect manipulation point, right? So if you like try bear that in mind when you look at it, it doesn't matter if it's what we had a trade the other day. I think was it on GU or something, and I'd say right, well, move the manipulation point lower because we could go 10 pips up or 10 pips down or 20, it was like 20 pips in between it. So just take the trade based on this. It was the week before, I think, was it? Anyway, we said, well, just look, if our rules are 2 candles above it, then we close, we don't take the trade. But if this manipulation point is slightly higher, we can take this trade, and then it would tank down. And I think that's what happened in the end. I don't think it was this week. I took a trade in Asia this week, which not like me, but I wasn't well, and I couldn't sleep, and I came up and it was on AU, this one here. And I kind of chanced it again a little bit, probably a bit tired, but I took this trade here, and when we closed down here, it's like 1:30, I said, do you know what, sod it, I'm just going to go to break even, and I'll go to sleep, and whatever happens. When we come up in the morning, we just continued down, and I closed it, I think, just before I left, because I was going to help my mate build that shed. It's my wife's, she's got a salon in Saundersfoot. It's her landlord. It is the little guy in the photo the other day. I was helping him. Anyway, I took my profit and then it pulled back and whatever. But I done for the day. So I was seeing this spike and this retracement, and again, it's basically just reading price action. You got that break. You see, it's just. You see it's just kind of rejecting, but you've had this impulsive move down. I thought we'd go down, fill the wick. Maybe I shouldn't have taken it, but sometimes your luck is in. So there we go.
I found a feed recently where there's been it looks like there's been a valid setup of a manipulation point, and where I've been trying to nail down where I hit an entry or put a limit order on for it to come back. I haven't taken any setups where they've got your confirmation candle and I've just hit a market order on it. I haven't done that yet. Everything I've done so far has been a limit on a slight, say, retracement back off that confirmation candle.
Yeah.
And I've just been trying to work out. A lot of the time I've been putting it in at, say, 50% of what that confirmation candle.
The 50% is a great entry point. I think we missed one on Euro CAD the other day.
Yeah, I've missed a few from doing that by I can't remember which one was it. It might have been DJ this week. I think you were looking at the same one. I think maybe on a Thursday when it was for a long DJ, and I think I got missed for the entry by my spread and my broker, and I think I got missed by about a pip or something.
Yeah, I think
I put that on the 50%.
Yeah. I mean, it's a pain in the ass when that happens, but it is what it is at the end of the day. Right, if we're going to be shutting this meeting down in 20 minutes when it ends, I'll go through the basics of how I select my levels in the morning, okay? Yeah. I don't always have a clean chart, but I'd like to start on a monthly, weekly, daily, okay? So you're looking at the chart here, and obviously what stands out is you've got this area here, all right? Anything that's been kind of rejected here, we've got 3, these are monthly rejections, okay? And then again, if we move to the left, that's a long time ago, it's 1985, so back in the Thatcher days, but certainly around about here, and until the pandemic. Okay, this was the pandemic, I think, was it? Yeah, 20th of March 2020, and we've only this year and last year been trading underneath it. Okay, when you look at the weekly, you try and refine where this level is. I've moved over to FX CM. I like to use a Wanda normally, but I don't want to clear the charts on that just yet. So on the weekly, on the weekly we have So this is where now I'd like to adjust it. So we can have this area here, and again, just looking at, you know, previous respect or rejection to where this market has been, and you look at this area here. Okay, this was the last 2 weeks. Okay, so there's a manipulation point there, which for me probably would have gone just a little bit. No, I'd stay with these for now. I'm not looking for precision here. Okay, I'm looking for reactions to these areas. So we've got this area here. Again, you can see this wick. You can see this wick here. You can see these candles close kind of on top of it. And again, you can see these rejections here. There's another area just on this wick, because wicks generally get filled. And then if you look to your left again, you can see, you know, maybe we can move it up to that. These candles, we've got a little rejection here, and again here. So we go down to the daily, and each time what I want to do basically is I just want to refine these levels as I'm moving down the time frames. So we can either go with an added manipulation point here, or we could say, right, this is the most recent touch. Okay, we almost come back up to it here, rejected it. That would stay where it is for me at the minute. But yeah, again, this area, it's kind of like the 50% mark, isn't it? So it's your premium and your discount prices, I suppose. Yeah, 50% there. Excuse me. 4 hour next, and again, we're just looking for basic adjustments. So this would go slightly higher, and as you mark that, you're now looking at this area. That's a 4 hour order block, that candle there, rejection, and then, well, we didn't quite reach this. That's a clear level there as well. So I don't always add all of these in, it depends where price is in the market. This would go to the bottom of this wick, and then I'd have another one just here. So it's all quite plain and simple basically. As you're moving down the time frames, we're adjusting them. So we know that these levels now, if we were to go back up to the monthly, if for instance any of these don't quite make sense, I suppose that could be moved up a little bit. Kind of happy with these to an extent. That's the high. We've moved that back up. And I sit here for 10 minutes and I just play around with them. Because I'm looking for the places where the market's going to turn, basically. Or where is it going to break above? And where is price heading? I mean, ultimately at the minute we've got this gap here, which is, I think, going to be filled potentially. So I may leave that there, or just kind of put it back so it's there. It's not in plain sight.
Yeah.
Again, so this area, this candle. Just maybe move those down a bit, so they're kind of in level. 4 hour again, and after about maybe 5-10 minutes, you kind of get a few areas. So we're only concentrating on this area here, really. We know that these levels now are potentially the strongest areas in the market. So we go down to the 1 hour and say, right, where is price now? Where is it going? Where's it been? What's it been doing the last couple of days? Well, I don't always draw long-term trend lines, but that's down. And the last couple of days here, we're moving down. I do like to use ADR as you probably see in parts of the course, but this is open bias because there's no ADR hit. This is also, and this is the first ADR that's been hit over that 3 days. If you were to measure it, it's 200 pips, 217 pips. It's still not quite a full market cycle. So turn this off because it's messy. Adjust this level down here. I'd leave that where it is, just move it up to these highs here, because there's a clear strong rejection here. But you see it's now kind of lining up with the EMA as well. And the 200 EMA is probably one of the most, it's the strongest EMA, especially when you're up higher in the higher time frames. I wouldn't be looking for a trade from here, purely on the basis that, okay, we've hit a full ADR to the downside. So I'd be looking for one of two things, okay? Either I want price to break below it, and when I say break below, I don't mean a small little break like that. I want a break, and I want a high volume break, and then ideally, I want it to come back slow, because let's say, for example, this is demand, okay, and you've done that kind of thing, bam, and then it goes bam, like that, okay? For me, that's a reversal, because you can see the V shape. It's an instantaneous rejection, all right? So we don't want that kind of price action. We want price action to be more like that, okay? And then it can either just zigzag all the way up, or it can do that. It can either go down, it can go back up. When it gets to the top, I do like to see it move quicker, but then I want it to come back down and do that kind of thing, because the difference is that this is, it's profit taking, it's reaccumulation, it's creating areas of liquidity, it's creating false areas in the market. Whereas if it just slams down, slams back up, well, that for me is a liquidity grab down, and the rejection level is here. The rejection level is not this. This is driving price down. For example, you're going to go buy apples. You want to sell apples in a shop. You want to buy apples at the cheapest price. You can walk down the road here and buy 5 apples for 10 pence. But if you buy them, at the closest place to your house, they're going to cost you 25 pence. Well, you fucking walk down the road, don't you? You walk down the road to pick up the apples, and then you make 25% more profit than what you would if you didn't walk down the road. So if you kind of have that kind of almost like that setting in your head, if it's coming back slowly, chances are it's going to react and slam back down. Otherwise, if it slams down, slams back up, you hear me talking a lot about daily rejections, and that'll be, something like this. It slams down, slams back up, this kind of thing. I don't know where else you can see that. Okay, this is kind of a quick down. This V shape here, that V shape, and then it powers up. A lot of this is news as well, but little bit of an insight into how I think about what price action is doing. So here, okay, I'd want it to break down and then come back up, or generate a little bit of, it may even take a day, accumulate during Asia, up and then back down. Ultimately, if it's going to go this way, we need a clear signal that it's gonna go bullish. GBP USD at the minute is looking like it looks like they're all going to continue down. So purely on the basis of DXY, this thing's now been bullish on the daily for me. We rejected these May levels. Okay, you can see how fast it's moved away. So that's the rejection, reaccumulation, because it kind of doesn't know what it's going to do. now it's breaking up. I think we'll pull back a bit, maybe Monday, Tuesday, or the whole of next week maybe, but it's going back up. And the reason why, again, is you've got these areas here, right? This is like a magnet, okay? We haven't really got much going on down here. There's a lot of unspent and unfair orders up here. So ultimately we'll end up back here at some point. We may reject this area then and come back down, but we use this as like our ammunition, if you like. What is driving price? Is the US dollar driving price, or is GBP driving price? Well, generally, we got news next week as well. So heavy news starting, is it Wednesday? Is that the first? NFP on Friday. So you start seeing, right, okay, nobody knows what's going to happen anymore. The market's fueled by all these crazy news releases. US dollar's a safe haven. Everybody's taking their money out of wherever it is and pumping it back in the DXY into US dollar. And then you may say, coming sort of some point towards next week, they start pulling it out again, putting it back in, whatever. We've got 5 minutes left, so I don't mind reopening this if you want to after. Sometimes I do. I stop the recording though.
That's right.
You got any questions?
I've got to get on the Wi-Fi with vaccine.
Yeah. All right. No problem. Well, it's good to meet you anyway, and I try to do more of these. I've really kind of I haven't spent as much time reviewing trades lately. I think maybe since Christmas I've kind of gone off the boil with it. I think a lot of that is because when I do the video, my internet's not that great here, and it takes like 5-6 hours for the video to get onto YouTube into HD. So I leave the house and then come back and whatever. I think I just maybe got a bit fed up of playing around with that. But yeah, hopefully you've seen some of my insights here, and it's going to be helpful over the next couple of weeks. And as I always say to everyone, I'm in the chat room pretty much all day.
Yeah, that has been good. How the chat room's been pretty good really.
It's nice. It's a nice environment. It's not boisterous. I don't entertain that. If anyone comes in and they're boisterous, they'll get muted or thrown out like the free chat. I don't know what I'm going to do with that free chat room. Whether I'm going to hold it open or everybody's
gone quiet the last couple of days
since Ottoman's gone. He's from Barcelona. I don't know why he's so loud, but he's got some beef. He needs to sort that out. He's not sorting it out in my chat room. I don't think it's fair. So.
I mean, it looks very good. I mean, it's funny. I mean, your Instagram website's really, I think, looks great. It's pretty polished. Did you set it up all yourself?
What, the website?
Yeah.
Yeah, I built that website in a day. And then I tweak around with it now and again. I take pages off and put them back on. I get traffic driven there, but I don't. The conversion, I think I need to do some videos. I was going to do a video introduction of what is the course, and like a screen share of Discord, and say, well, this is how everything works. You've got all the different sections. Most of everything has got PDF to accompany, which people who don't have British as their or English as their first language, they can print it off and translate it. So I think it's a good. I built it. I think maybe if I watch back through it, I'd be wanting to change a few things. But I think the fundamental basics are there, and then you've got the strategy. But for me, it's the ongoing support, the daily repetition, regular Zoom meetings, and also not just that. It's the seeing the same thing over and over again. So repetition, but the daily, the reviews, which I need to get back to doing. I need to start doing those. They don't take long, 10 minutes, 15 minutes.
Yeah.
But sometimes I do go on and on for about 40 minutes, and then fuck's sake. Yeah, need to wind it in a bit. This is why I took the trade. This is what happened. This is price action. This is the level selection. Here's the confluences. If this happens again, I take it. It may not win next time, but this is part of the system. This is why I take this trade. and then people can see that over and over and over again. Some people get it quicker than others, but as I say, I'm there on hand all day. I used to share my trades as I was entering them, but a lot of stress because I was spending time focusing on the entry, the price, and then typing it out and putting a chart in. I was missing my own orders, and I thought, I can't keep doing this. I can share I do my best in the chat room. I think is a fair bit going on there, but we're 30 seconds from closing down, I think, right? So
all right.
Well, have a good weekend, mate. I'll get this
I'll
get this recording posted somewhere so you can watch it back if you need to. But
I'm not sure I like the sound of my own voice.
it takes some getting used to, mate, don't worry.
Yeah, I bet it does.
All right. Right, good to talk to you. Yeah, catch you soon, mate. All right, try, buddy.